Welcome, guys. Welcome to another live session. Today is September 23rd, 2019, and it's a Monday. We're back. Let's get to it. Before we start with the official session, I know I have a lot of tabs open, but just a quick reminder, our promotion, our 10 days of full access for $1 ends today at midnight Eastern Time. So just take that offer in. 10 days, and it's only $1. So for $1, you can get 10 days of live sessions and our signals. So instead of getting coffee before work, just make coffee at home and spend that dollar on this promotion. You're going to get so much value in this 10 days. Depending on your account size, you might make the dollar back within the first second of a signal, or at least by the end of the day, if your account's small enough. And the knowledge you get in the sessions, I think it's more than $1. Like I said, it's the cost of a coffee. If you don't like it, if you didn't enjoy the service, you can cancel at any time. If you do enjoy, you can continue on after for $97 per month. So yeah, this is the link to sign up. You've all probably gotten an email, end of summer promotion. That's the subject line. But here is a URL for the actual promo if you want to take advantage. It's forexlens.com/trading room /getting started /trading room promo /. You can probably type it in. It's in the email, so if you don't want to type all that in, you can just click the email and bring it up. If you don't have the email, just email support@forexlens.com or go onto our website and chat with the live chat agent, and they can get you started. So tonight, midnight Eastern time, so 12 a.m. Eastern time. So you have around 13 hours from now to take advantage. It's only $1. No extra charge on it. No tax or PayPal fee. Nothing. It's just $1 flat. So that's out of the way. Let's get into the markets. Before we do, last night during London session, we had a lot of Euro PMI come out from French and German flash manufacturing, and red all across the board. This is not a surprise. The overall trade war has really slowed down the economy for Europe, and they're already struggling and cutting rates even before the trade war. But when your major exports is for example auto for Germany, you rely heavily on Chinese goods. And so if we look across the board, all reds, and Draghi spoke at 9 a.m. Eastern, and we have this article right here, so we'll just go through it very quickly. It's titled Eurozone Economic Rebound Not in Sight, ECB's Draghi. So if you go into what happened, Euro installed in September, first year I showed earlier, dragged down the shrinking activity in Germany, the bloc's economic engine. Manufacturing recession, recent data for the indicators in U.S. So there's no convincing signs of a rebound in growth in the near future, and the balance of risk to growth outlook remains tilted to the downside. Draghi told the European Parliament Committee on Economic Affairs. So the ECB cut rates to record low 2 weeks ago, and unveiled plans to restart debt purchases and kept the door open to more rate cuts in hope of lowering borrowing costs. So they're open to further rate costs because the current usually when you cut rates, you do quantitative easing, which means in simpler terms you make it easier for businesses and individuals to loan money because the interest rates are lower, and that makes a lot of new capital being entered into the economy and gets it flowing and gets it growing again. But because of the trade war and the slowdown in German manufacturing, they might have to cut rates again or make other changes. So obviously we'll be looking to short the euro. Let's look at the fundamentals for the rest of the day. Pretty quiet tomorrow. Consumer confidence, and we have low speaking at 5:55 a.m. for Aussie and NSD. So let's get into the session. Like always, our chat is working, so I'm actually gonna pop up. Make sure you guys are on the portal. Go to the chat, see what's up. Hope you guys had a great weekend. A nice weekend to kind of take a step back and regroup. So second. For those that are watching on YouTube, if you want, you can sign up for a free membership on our website just to make things easier and quicker. And you also get our charts. So let me just pop up this chat. Sometimes if stuff isn't working, just refresh the portal and you should be good. Alright, awesome. So let's get into it. This is our daily outlook for the euro. We still stay within this channel, and on Friday we drew this major arrow down to 1.08500, and that's our final target for our shorts. We have a stop at 1.09262. And for people that are wondering what all these lines represent, they all represent key levels. And if you're wondering, how do I draw my key levels? If you go on our portal and you go to education, and then you go to technical analysis, you're gonna see identifying key support and resistance zones. That's where I explain it in more detail. But this is our final take profit level. One of our take profit areas before that is right at these recent lows where you wicked to, and that's at 1.09291. So let's go on to the 1 hourly, see what's happening. And on the 1 hour, if we zoom out, we can kind of see a potential for a break and retest. So let's go through what that means. If we look at past price action at this level, 1.09924, or you can say 110,000. It was a support here. It was a support here. Support here. We look to the left, and it was resistance here. So as of recent times, it's been a nice support for euro, right? Or has rebounded anytime we had a sell-off. Now, if we zoom in, we had a decent rebound, but we came back down, and this was probably due to the news during London, the poor manufacturing data. So we had the big breakdown, and then we have a retest, or we have a retrace with these green candles. Now, ideally for our short bias, we want this retrace to kind of end where it is right now. So right here, if we can get a close and then candles start printing down this way, that'd be great. That's our ideal scenario, especially because if we draw out the fibs, we want to catch that 50 fib, at latest the 50 fib. Anything longer, our entry is invalidated. So if we look at the fib from the swing high to the swing low, you can see we're kind of resting on the 50 fib. Depending on how this closes, 50 to 61.8, we'll be looking for entries to go short. Anything higher, we'd wait for maybe a possible break below this level, because we could very well, if we look to the left, what happened here is we can close back above this support 1.0931, and then go do our range fill like we did here, back to these highs. So 1.10683. So obviously we want the best entry. We don't want to get stuck in a long when we're looking for a short. Today is Monday, so we're not rushing anything as always, but the bias has been short and it will stay that way. I mean, if you look at the price action, still making lower highs, lower lows, lower highs, lower lows. That's fine, but best entry is going to be this scenario where we get that next break below the support at 1.09924 area. So these are all areas. When I draw my levels, you can put a 2 to 3 pip kind of range between these levels. It doesn't have to be the exact level, but wait for that price action. Do not use sell stops. Similar story for the pound. The pound is kind of in a tricky spot actually, because if we look to the left, last week we had the long, and then we had price come back off 125.560. That was a given. This is a key level that we drew. Since then, we've kind of popped back down to this previous resistance at 1.24200. If we look to the left, actually, I think the daily or the 8 hourly will show this better. If we go on the 8 hourly, you can see our previous support is where we're coming back at. right? 124 200 area. When we had this nice push on the pound, that's the point where we retrace to. And these next several pushes, we've come back down to that level. So it's looking like we're creating support at this region. So for shorts, our best bet is a close. Let's look to the left. A close below 124,000. So 124,000, a close below would be great to go short to 123,739. That's about 30 or so pips before we can go to these levels down below. Obviously, the best possible case scenario, and if you've been trading ranges, is probably down below 123,730. Remember when we talked about this level back in the first week of August, going on to September when we broke through. This was a key resistance, 123,730, and that's where we want our close to be. Our ideal close is below this level, and that'll signify further shorts. So yep. So the audio is good, and yeah. So that's what we're gonna be looking for. A close below one of these two levels. This level will provide the best possible short, and on the daily, I wouldn't call this a head and shoulders. So for example, this would be the left shoulder, this would be the right, the head. This would be the right shoulder. Maybe we could be creating a head and shoulders if pound USD can pop back up to right here and then go down. Then that'd be an official head and shoulders pattern. But not too enticing because this week they have, I believe, let's look. This is why I love daily effects. This week is, UK markets wait for Supreme Court ruling, Brexit update webinar. So they're going to be doing, a kind of a Supreme Court vote for the whole Brexit because Boris Johnson's being pretty aggressive about the whole Brexit deal. I think October 17th is their date to get it done. So things might get spooky. Let's just say that. So moving on to gold. Gold, the precious metal. Let's see what it's doing. And it is going long. So I think on Friday we discussed this with this arrow. It is going long, and actually it's setting up for a decent entry. All we need is waiting for the pullback. 1519 key resistance and support for the gold. If we look to the left, we can kind of see a pattern here. We've been stuck in this trading range from 1519 to 1490, and whenever we got a break above, we'd go to somewhere in these highs around here. Extend this over, and so that's the possible scenario we have. There's instances where we came back, tap resistance, came back to 1519, and then went again. So that's what we want here. We're on the 8 hour, so let's see if the hourly provides any sort of entry. Looking to the left. So on the hourly, we're looking for a possible retrace. It's a pretty aggressive move that the gold did today. Possible retrace to maybe somewhere around here. 1521. The best possible retrace is obviously 1519. That way our risk reward would be pretty small. And let me actually pan that out for you guys. For the people that do trade gold, if you get a retrace somewhere here, right around 1522, never stops just below 1519 at 1550. And our target right around here, so right around 1550. So a key psych level for gold, 1550, has stalled many bull runs in the past, and that's what we're looking for. A nice push there, and a 3.86 risk reward ratio trade will be pretty good for the week. You can probably bag 280 pips just from this trade alone. So be on the lookout for that. But 15, 20, 21 is the area where we're looking for entries. obviously the best entry is 15.19, a rejection off there. Let me just peek the chat if anyone has any questions. Looks like we're good. I think a lot of people are on YouTube. I'll show you guys how to sign up for the portal. On the flip side, USDN has a possible sell for the remainder of the week. So on Friday, or I believe on Thursday, we talked about potential long for USDN, and that was only if we get a close above 108,800. So you can see it's a previous resistance. We had a failure to close above, and that's what we're looking for. And since then, I believe the U.S. dollar has come into some issues with Iran and the Saudi attack as new developments come out. So it's kind of dropped since then. And we could potentially see a move down to, definitely down to here. So these recent supports, wick areas, 107, 100. Don't be surprised if we get there by the end of the day. So right around 30 pips away from where we are right now. But the best setup obviously would be off this trend line, which is from the daily time frame. If we go to the weekly, you can see it. So on the weekly time frame, you can actually adjust this a bit. So on the weekly time frame, you drew this trend line, and you can see the price action. It's looking pretty bearish. So I would not be surprised if we go all the way to the bottom of this trend line. And this is not a bad setup to enter. We can have our first take profit at 107, 120, right around 30 pips from now. Let's see if the hourly provides a decent entry to do so. So I'm just going to draw this horizontal array at these wicks here as a recent support. Because if we zoom in, we can see that price surged and then came back and retested this level and has since then dropped. So that could be a place where we can put our stops, and we can have a trade set up like this. Now this is a pretty decent swing setup. Our stops could even be up to here, and it'd still be pretty good, 2.45. This is a nice conservative trade because we're trading with the trend. The only thing that we'd have to watch out for is if we do get a closure above 107.529, then we could get out early. And entry is 107.419, and stop loss is 107.834. So a 40 pip stop to get a nice amount of pips, 2.46 risk to reward. I would be more than happy to enter this trade. I'm gonna wait for the that's a good stop area right around here. So I'm gonna wait for the the hourly closure. If we zoom in, we can see the hourly closure could easily be a bullish engulfing candle. So we're just gonna wait for this hourly closure. Alternatively, what we can do is we can enter below. If we get a closure below 107.351, if we look, we have made some support there. If we get a closure below, like somewhere down here, we can just enter right away. On the 15-minute, you could probably see the support that we've created here. So that's where we can look for the best entry, and this was a nice setup to enter because we don't have much fundamentals coming out for the US dollar in the next 48. It'd be a good setup for the week. So we've covered the euro, we've covered the pound, we covered gold and USD yen. If you guys have any pair recommendations, let me know. I think last week we spoke of Aussie CHF. We are still in that trade, so let's see how that trade is doing. I told you guys to hold it over the weekend, and what a beautiful setup. And if you look, we should be well on our way to our second take profit, 0.66500 area, and then the next one at 0.65420. Right now we're up 63 pips, and that's great. And we didn't have to get stopped at our entry or nothing. So let this trade play out. This will continue to give us pips as the day goes on. So even if you don't get any new setups, this will continue to pay off. I have about 30% of my initial position still running, and I'll probably leave it and just close increments of 4 or 5% as the trade plays out. So this setup and CAD CHF was something that we looked at on Friday before we ended the week off. So let's take a look at CAD CHF and see if so CAD CHF is also showing another setup. So last week I believe someone on the chat asked for a setup. I gave a nice short setup, which was around 40 pips. If we look, we have a potential to go lower. If you look to the left, and we'll see the daily, we have a potential to go lower. And to go lower, all we want is a closure below 0.74534. We've created support here with a lot of these wicks, and that's what we need. A closure below to go down lower. If we look at the daily, even the weekly, you can see the overall setup. I'll actually remove the arrow so you guys can see. Oops. So if you look at the weekly time frame, this is very bearish. Here comes our descending trend line. A nice shooting star. If you zoom in, you can see the shooting star. A perfect shooting star candle. No wick to the bottom. It's perfect. So if we move this over, I'm trying to make it look visible. If we move this over, we can see this candle, a nice inverted hammer. All we want is a close below to continue going down. And if we close this down, we can see we kind of have a range from 0.78522 to 0.73685. This kind of trading range. Let me pan out so you can see this. We have a range like this. So this is what we expect to happen, and hopefully it does. So that's what I mean by trading range. When price enters between these two levels, it's always inclined to fill out that range. And so over here, we expect CAD CHF to go lower. When we get a closure below this level, we can enter short again to catch that move. So some nice setups. I think fundamentally it's a pretty average week. Not too quiet, not too intense. But yeah, so this is Monday's session. Last reminder, make sure you take advantage of this promo, because tomorrow, Wednesday and Thursday is we're going to be grabbing those pips. And we've been averaging around 300 pips per week. Last week was 290, I believe. The week before was 314, and I believe the week before that was 500. So we're on a roll right now, and for only $1, the cost of a coffee, you can get 10 full days of full explanation of price action, technical analysis, fundamental analysis, and our 6 signal providers. So what are you waiting for? Take advantage. If you need help getting started, email support@forexlens.com. And to my paid users, I'll see you guys tomorrow at 11 a.m. Eastern for another live session. So take care, guys, and happy trading.